Hey everybody, welcome back to Covered Calls and Short Puts. My name is Mike Fairborn. I'm sitting in for Cameron May. Hope you had a fantastic weekend. It is a happy Monday. A lot to look at in the markets here this week, but very grateful to be filling in for Cam once again back in this class. Today, folks, I did want to take a look at a couple of different aspects, and you might imagine, yeah, short puts and covered calls. We're going to look at both. I want to look at a couple of scenarios where prices have maybe run up into a resistance level for specifically the covered call, which is an area that a lot of investors might decide to try to sell a call option there to generate some income. Is the expectation for prices maybe going sideways for a period of time, maybe a pause in the direction of trend, which can happen at longer term resistance. We'll also look at maybe those scenarios where prices are going to be neutral to bullish, just like a covered call, really, on the short put side as well. So really looking forward to diving into it. I'm joined in the chat by a good friend, a colleague of mine. It is a privilege to have Barb Armstrong in the chat here with us. Barb, I was on with Barb earlier today, so she's got her class, great class she taught, by the way. Encourage you to take a look at that, trading a smaller account. But you can follow us both on X. You can follow Barb Armstrong. That is Barb Armstrong, no spaces there, and then CS at the end. Very important because Barb and I do have some stragglers that like to kind of copy our names. Mine is just Mike Fairborn. She's written exactly there in the chat perfectly. Mike Fairborn, CS as well. We'd love to have you. If you're not already on X with us there, Barb does post some really great content. But good afternoon or good afternoon. It is good afternoon. It's just barely good morning to some of you. But William Tucker, Ken, Ray, Tatiana, we've got Andy, Tony, Yuchin, Deborah Reed here, Chuck, and others. Any questions, comments you have, throw those in the chat so we can address those for you, folks. Let's hit some disclosures to get the show going here. Options do carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. Investing does involve risk, including the loss of principal. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. The paper money software application is for educational purposes only as well. Quick note too, stop loss orders will not guarantee an execution at or near the activation price. In terms of our last slide here, there are risks associated with investing in dividend-paying stocks, including but not limited to the risk that stocks may reduce or stop paying dividends. Okay, also, rolling strategies can entail additional transaction costs, including multiple contract fees, which may impact any potential return. Now, with that, let's go ahead and do a brief overview with the markets. I'm always hesitant about how long I do these overviews because you may have seen an overview already today, would be my guess. With that, let's go ahead and pull it up, though. We've had a pretty big run. You know, there was a lot of discussion about the 9-day bounce, or 9 days of increases, that is. That shows 10, but I'm counting the very first day. There were 9 days of new highs. I don't think we'll get one. I mean, it's possible we get one today. There's 2 hours left in the trading day still. But could we get a new closing high again for the 10th day? Well, that's interesting. I can say this, that we did get up to some interesting levels of resistance in terms of the 5660, which is a long-term horizontal level, as you can see there, of support and resistance that we've had some pretty good tendencies to hold up to. In addition, there was that 61.8% Fibonacci level, always informative and helpful to see. A lot of times with that level, which we did exceed and we closed above there on Friday, a lot of traders, investors will say, hey, if you can get above this level, if you can close above here, they will suggest that there's a greater likelihood of the trend continuing this way as opposed to coming back down and testing lower. That's what they'll say. So they will favor the upside move with that strength. And I will say this, in favor actually of the upside move, we have a trend that has developed off the bottom. There is a higher high and a higher low off of a shorter term time frame. And one of the really interesting factors here is that we did cross above the 50% fib. And that too is also one of those big numbers, particularly when you get a really good anchoring on the chart. Anchoring meaning that you've got some precedence there in terms of actual support lows bounces, we could say. There's a bounce there. There was a gap down that went exactly to that 50% level. We came up almost exactly to the 50% here, and we began to hold it at 5,500. Just mark that, keep that in mind. Those are interesting positives that a lot of technicians would say, all else equal, that was an interesting bounce, and we shall see what does happen there. As a quick note, because we are going to be looking into this area a little bit, NDX. NDX is actually, it's been really kind of a little bit stronger bounce, as you can see, when the economy gets a little bit stronger, or expectations for the economy, and we could say less uncertainty in the market does take place. A lot of times it is the tech stocks. We are looking at a tech-heavy index there in the NASDAQ 100. These sometimes will get the biggest force, and they might move up the quickest. In fact, just a quick look at our sectors here. Let's see, where are we? Yeah. I think it's just that. Yeah. No, I'm sorry, that's from other class. Sector grid. I have a few of them in there, and it is the sector grid. But what I was going to say is technology. Consumer staples had been pretty good for a while. It had held up, I should say, in terms of that sector. But look at technology now. It's starting to look a lot like what consumer staples look like a little bit earlier in the cycle trend. Communication services also, in the technology field, higher highs and higher lows. These have begun to look a little bit stronger. So keep an eye on that for what's going forward. Could be interesting for short puts or covered calls because, again, those are neutral to bullish type approaches to using options. Okay. So with this, I'm going to go back to my daily, monthly, weekly, and start looking at a few different stocks in here. It's interesting to see Verizon kind of pop up. It's one of the ones that I just had saved in terms of this grid. But you can see over here that Verizon itself is beginning to get one of these right through here. A little bit of a, what do we call them? We call them triangles. In fact, I think I could draw a triangle longer term right off the bottom. Ooh, that's tough to do freehand, folks, but you get the general idea. We're getting a coiling range, and when you get the coiling range in here, there might be an expectation for a move to the upside because the trend itself is also going up as well. I wanted to look at Verizon first here because if there is that expectation of a potential move coming up, if it does move, that they would say that there's the positive in terms of the trend. We don't know if it's going to happen for sure, but the trend is up. A quick note over here as we look at earnings. We are past earnings too. That could be a key role, can play a key role, trading ahead of earnings and whatnot. It did beat earnings by about, I guess 5 cents, but it still did beat earnings. And so you can see prices coming in here. So what could the expectation be here? Well, if it continues to coil, what does that look like? Coiling would put us down into this range, possibly. Maybe it still continues to get higher lows and lower highs. Could that work at a particular delta level? We'll talk about delta here in just a second. But could it work at a level a little bit lower if we were minus a put there? Yeah, maybe, huh? Right on the neutral side? What about the bullish side? If prices were to just spike higher here and go on up and break out, well, as long as we're holding above our short put point, we'll look at short puts first here. As long as we're holding above that strike price that we're selling those short puts at, those could both be winning conditions. That's why we say with short puts, it's bullish to neutral. Either one of those unfold, it could mean at expiration, our max gain. That's what traders will shoot for, holding above that strike price by expiration. So I wanted to look at that. I'm going to actually come on down a little bit and just catch up with there we go. I got it all set up. And welcome to all of you just joining us here. Great to have you on board. Smash that like button if you are interested in this content. And let's go ahead and, well, you're here, so you might be interested in it. But Verizon is one that has been paying dividends as well. So that's just something to consider if you were to get assigned shares, because very likely if you do go below that strike price level by expiration, there is an assignment that unfolds. And if you're going to be assigned, well, that means for every one standard equity options contract that you sell or write, same thing, you would be very likely on the hook for 100 shares of stock. But some people love that. That's how they sometimes buy stock at a cheaper price and get a premium on top of it. I know we addressed that a little bit last week, but just in general, if let's say we had sold a 42, but we were okay with prices maybe coming down below there by expiration, well, if we sold one put, that's just going to equate to 100 shares of stock, very, very likely, as I mentioned. 100 shares of stock. And when you get the stock, that's when you can also get the income associated with it, as long as those dividends keep getting paid. Now, I think this is a dividend aristocrat, that is Verizon. So they've been increasing their dividends for at least 25 years. Now, this is an interesting little bounce here on Verizon. The money flow, very, very strong. In fact, we've just been hitting highs in terms of money flow, even though prices have very clearly been making lower high, and lower high again. All right, so let's go ahead and take a look at our trade tab over here, kind of explore a potential entry as we look at it. Now, a lot of times too, let's narrow down the number of strikes here. Let's just go to 15 for now. When traders are looking to sell options, in many cases, they will go with a 20 to 50 day time frame. Now, you can go longer when you're looking to maybe sell puts or sell calls for a covered call. 20 to 50 days. We're right there at the 46. It's interesting here because we are getting, we're within the 50 range. And if we were to look over here at that, you can see also that our open interest can really, really help, especially when you're getting in the tens of thousands number, right? The 10,000 range, the 5-digit level. We can look over here and we can see, gosh, there's 10,000, there's 1,000. That's not too bad. But then also another, in the 12,000 range right there. This stock does have over 1 million shares traded as well. These can help to facilitate, just a better spread between the bid and the ask price. Of course, we are opening our position on the bid. Let's look at our delta as an indication of where we might consider selling an option. The delta is a reference for a $1 increase in the price of the underlying stock. We are up here at the underlying. For every $1 increase that stock goes up, it will influence the option bid and ask prices, that spread by the amount of the delta. You can see over here that would be 43 cents, 31 cents, 22 cents. Traders will oftentimes look for the 0.2 to a 0.4 delta, and they will also use this as an expectation. This 42 that sits right kind of in the middle of that range right here. There's our 42. Yeah, it's the 42 strike comes in at a 31 delta, folks, a 31. This also has incredible open interest associated with it. We are not the only ones looking at this option. There are 37 contracts traded today as well, but that 31 is an expectation, like a 31% expectation that traders will have that the price of the stock will not go below that 42 by expiration. And the expiration right here clearly is 46 days away. So you can see that, if you're averaging this out, obviously it's like according to Delta, what we're seeing right now, and those numbers do change, it's close approximately like a 30% chance, according to the way traders will look at it, or expectation that prices will go below 42, and a 70% chance that they will hold above it. That's something in addition to kind of consider. It does have a theta right now as it stands of a penny or $1 a day. That is 7 days a week that will erode, including weekends and holidays. Let's go ahead and take a look at that right now. I'm going to click on the 64 right now. Well, before I do that, let's go back to the chart, because what I've always found is when I first was looking into this, I thought, gosh, that's a great way to maybe get some additional insight, some additional information about why a stock, through traders' expectations, it might hold up. It's got a lower delta. It might hold up at that strike price. Now, that's totally separate and unique, completely separate from what we looked at right here on the chart. What do we look at on the chart? It beat earnings. It's past earnings. It's a company that's been consolidating after breaking a new high over here. It's in a bit of a triangle pattern. It had a nice little gap up here, and it's been holding that gap as well. But these are all technical kind of indicators that might influence supply and demand or traders. We also talked about money flow, being strong. Remember, money flow helps to net out buyers versus sellers. That shows that maybe there's been buying accumulation occurring in here despite lower highs, higher lows, that symmetrical triangle formation. It might be something that could be added to the group. And traders will just kind of like in their own mind, they say, hey, these are different methods and different sorts of, in their own mind, probabilities or potentials for a stock to at least hold up. So let's take a look at that first and then keep adding to it. Okay, but I just included in there fundamentals, technicals, and historical indications from just the option Greeks, in other words. So there's delta. Let's go ahead and click on that 42. What I want to show you right now, though, is I'm going to right click on it. I'm going to go into a sell custom with a stop order. So I want to have a level in here, and I want you guys to think about this too. I mean, this is just something that we kind of can consider. And that's, if we're looking at this trade and we're just using delta, for example, we can say that there's, let's say, then an approximate 70% chance or expectation that traders might have right now that the price will hold above the 42 strike by that expiration date. Now let's look at it this way. If we were using this, and as I mentioned too, there could be fundamentals that play in that could influence this. There could be technicals. Again, we're looking at kind of what traders would look at for a bullish situation, bullish to neutral on the chart. But if it's a 70% chance that our expectation is, or possibly even higher, whatever we're calculating in our own minds, and we can win, we try to win at our expectation of a 70% or plus higher time. What's interesting is maybe we want to limit, if we're just looking to trade this, limit the potential for this to go against us. And how might we do that? We might do it by saying, well, let's just say if it's 60 cents approximately. It says 61 right here. That's fine. But approximately 60 cents. If I double that, that is $1.20. I could potentially look at exiting this when it goes against me double, but twice, or at least the amount, I should say, that I'm getting paid. So it works against me to the amount that I would be receiving. It's kind of a 1-to-1 here, right? I risk one to make one. Could that work? Could we ever risk one to make one? A 1-to-1 scenario. You know where that might work? When we perceive that we're going to be winning 70+% of the time. And it might be higher than that, right? I said 70+%, but we're only willing to have it go against us as much as the stop. The stop, obviously, at prices can gap and do other things, but that would be one area that if it's working against us, even, because we still have theta working on our side, but let's say it still goes against us. Well, if that's the case, then we're only willing to risk one when we're going to make one, right? So what I'm going to do, instead of leaving that just at $1 higher, as it says here, I'm just going to go 120. You guys see that? And what I'm going to do is I'm actually going to put a couple contracts in right now. So I've just added it 2. I've got it, well, here, I got to add 2 down there. Okay. But I'm going to put this in as a good till cancel order. And that is a short put. Now, Barb does teach a class where, and by the way, some of the classes she does look at, I look at too in my swing trade class, where we can do like short put verticals and different ways to sort of reduce the margin requirements, things along those lines. But we're just talking about straight short puts in this case. Now, let's go ahead and take a look at it, confirm and send here and see what we've got. Let's confirm that we've got this correctly. It looks good down here. Oh, the good till cancel should have been right there. It didn't look so good. Spoke too soon. There we go. All right. Okay, so we got our potential exit. We know that our order to go in is there in a good to cancel stop if it does climb up, right? Because then we would know it's working against us. If it's going higher, right? The option price. obviously if it's breaking lower. But this isn't a scenario where we're just looking to trade. In this case, we're looking at, yeah, there is the buying power effect. You've got the max loss. The max loss is in there because it's a reference of if we do get an assignment and we buy Verizon. That's why we need to recognize this for what it is. The 8,200 and change. That means that, we get assigned shares of stock and Verizon goes to zero. That's correct. Verizon goes bankrupt. That's what would ultimately have to happen. Get that assignment and the stock to go, it drops let's just say it drops to zero. That's what we're looking at. Right now it's at $43 and change. Okay, I'm gonna go ahead and click on send right there. And there we go. We actually got a fill at 64 cents. Okay, fair enough. We can adjust that stop if we wanted to raise that up, but you get the general idea in terms of the 1-to-1. All right. Yeah, so this is the desktop platform that we're all kind of using right now. This should be a very similar one, although I would say some coaches have a white background. I did for the longest time, and I just switched over to the dark background as well. I mean, recently. So, all right, let's hit another one, and then we'll go on to some covered calls. Now, if we come over here, let's go into Meta, and let's see what's going on with Meta a little bit. Meta is past earnings. I'll push this down so you can kind of see it. We had some pretty good volume around the earnings before and after earnings. You can see the gap over here too. We did take out this level right in here. Let's just go ahead and point to it. About 580, as you can see right there. About a 580. And with that 580, we broke above it. So we did close above this level. We also gapped. There is a gap right there. Oh, let's see. There's a gap right here. Pretty clear, easy to see. That was based on earnings. Now, I thought I remember Meta beating earnings. I'm pretty sure they did. Let me just double check it though. Okay, click again. Yes, in fact, they smashed their earnings expectations. Look at the earnings surprise there, folks. It was about $1.20 is what I saw. They beat it by about $1.20. Could that be a change in expectations? When you get a big earnings surprise like that, sometimes one of the reasons why the stock has been down as much as it's been, a little bit of a double bottom there, but think about it this way. If the stock dipped down this low, we took a look at earnings. Let's just do it again, right there. The expectation was $5.20. It came in at $6.43. Prices were down. What was the earnings expectation? The street number, so to speak, is what they say. A lot less than it is now. So could that be a big influence and maybe a trend reversal? Yeah, it could. Just a quick glance. I like to do this too. I think it is helpful to look at a weekly chart. Well, the trend's been really quite strong. That is a big pullback. Maybe it could make it up a little bit further or whatever. Maybe the trend will resume with such a good earnings number. But you have to say that there were big expectations of a dip. Now, if that continues on up here, that could be interesting. Now, I realize we're not catching this at a support bounce right now, but let's say somebody wanted to look at a trade on Meta, and maybe they're saying that there could be some support around 580 or 560, and they might be looking to sell a put just south of those levels. Remember, when you get a gap in here, that can be known for, I'll just put an R, or resistance that could slip, all through that gap area, there could be resistance. So let's look at that in terms of where that would stand too on a, let's see, Meta over here. Oh, I got to really expand these out. Let's go to 25. So here is the 25 strikes, because what I was trying to do was get us more of a glance when I expanded out the number of strikes, more of what might be out there for deltas between the 40, I'd actually say right there, the 38, roughly range to about 20, as we talked about delta. What does the 550 look like? I know that was a ways down. See, that's a 22 delta. And we do actually have, that is actually the biggest open interest. Now it just caught my attention. I was curious if it might catch other traders' attention. I'll tell you why. Sometimes you look at this and it gives you kind of a reference point as to what people are looking at. What are they seeing in terms of what option? Because you're just getting a large number. We're seeing it right at the money is quite high, around 6,600, and then this one is the biggest at about 550. Now, 550, as you can see over here, was right at the top of that gap, right after the earnings gap right here. And sometimes, not every time, nothing's in every time in the market, but sometimes that bottom of the gap, which is right there at about 550, between the 450, 460, that can be some really, really big support. Now, it doesn't have to be, but even I can come over here and look at this. I can anchor this high and low right there too. That's kind of interesting. I'm just going to do this too. I don't do this every time, but just for the heck of it, since it's anchoring a little bit more, what do the fibs show? So we have a kind of a double test bottom there. Sometimes I will use the closing prices. Most of the time I do, and then I'll go to the closing where we're trading at right now. Okay, so just below the 38.2 and just above the 50%. Very, very close to these two Fibonacci levels. Okay, so there could be something there. Let's go ahead and just look at that one for now. I'm going to go ahead and click on the 550 right there. So look at that. Isn't that amazing? That is an incredible spread. It's like, what is 15 cents for a $550 stock. Now, keep in mind, this is going to generate more income for sure, potential income, more of a credit, more premium, I should say. It's going to generate more premium up front, but then also the margin requirement's going to be up there as well. Before I even click on it, what do we have over here? Look at our delta. So 0.22, when you go lower, remember the expectations, the way that a lot of traders will use this, there's only a 0.22 or a 22% chance in their minds using delta that we will get below that level by, oh, one more, 550 by the expiration. Let's do this. There's the theta. It's at 24. So yeah, that's going to be a much bigger theta in terms of what that's going to be eroding each and every day over there. I mean, I guess per contract, what are we looking at? About $24 a day eroding? $24 as it stands right now, right? 7 days a week, but whatever that number does come out at. Because that's such a big number, sometimes too, I mean, there are different ways traders can do it. They could say, well, what about I just take 80% of that credit as well? And that's where my target is going to be. So if this is reduced by 80%, that could be just a natural target for me as well. We could put a trade like that in as well. So we can have like what we looked at before on the upside and the downside. So I'm going to go ahead and just right click here and we'll go down to, it is a sell, right? We're selling that bid, selling on the bid. It's a sell custom though. And we'll do an OCO bracket. Okay. So we'll look at this and we know that the upside, if it works against us, right? Remember the times two we were looking at, if it goes up twice as much, and you might not want to go that high. That's a lot more. That sort of unit value or the price is more than the prior one we looked at. But if we're just going to be sticking to that approach, we're just going to, we'll bring the calculator up and get it all going here. So I'm going to say 1065, assuming we were able to get it at that price, multiplied by 2. So 2130 would be a level we'd be looking to get out at, 2130, if it were to go against us. Now, if it goes in our favor, that is, let's go ahead and take the 1065. We'll multiply that by 0.8. No, I'm sorry, 0.2. Why did I do that? Of course, it's 0.2 to get the 20%. In other words, we're clearing 80%. 0.2. So if we can get down to about 213, and shoot, I think I'd probably just go 215 right there. What we're looking at here is maybe not waiting for every last penny, but maybe we're just looking to take that 80% off the table. Because, a lot of things can happen. I mean, if you've captured 80%, that's still a significant amount on a one contract, even on a one contract basis. Okay, so with that, let's go ahead and confirm it and look at what we've got. Let's look at our max losses and things like this. Now that we know what's going on behind the scenes too. The max profit is Okay, so that is max profit without the potential target, right? The exit there. In fact, let me do this. I want to change these. Sorry, real quick. Let's go to good tail cancel on both of these, of course. Confirm and send again so you could see it. And there we have it. The max profit, 1,065. The max loss. So Meta going to zero. If Facebook were to effectively go broke, that would be your max loss right there. Because again, we have that short put, and we talked about the assignments at the strike price potential. Okay. But okay, so that's it. Margin requirement, like I said, it's going to be a lot higher. It's 7,000. We're not using short put verticals. Of course, if we were, we could reduce that down substantially. Anyways, let's send that on through. And there we go. Did we get the 65? We did. 165. Okay. All right. So very good. So that's a couple of the short puts. Moving on over now, though, to a stock that I have already in my paper money demo account here. This is EW. Now, EW actually, I mean, it's Edward Life Sciences. EW could actually be in a position of breaking higher here. It's kind of a flag pattern. So looking at EW, I want to look at EW and I want to look at MRO. But let's just say, I mean, here's the two I was looking at potentially on a covered call side. Notice MRO has been flat for some time. It's in other words, there's a lot of resistance up top. Either of these two, EW, we'll just do it on EW, fine. We just got to put one under our belt here. But I want to just kind of highlight that sometimes traders, I should say, or investors that hold the stock might be saying, you know, if I think it might pull back one more time through here, what they might try to do then is sell a call at this level and try to generate some income over this time frame as we're waiting for basically that theta decay to impacted. Okay, so it is bullish to neutral. Now, one of the issues is, depending upon where we sell that at, if we were to sell it, let's say at an 80, sell the call, that is, and if the price of the stock goes above 80 by expiration, well, then we'd be looking to give up our stock at 80 if we don't do anything else. If we don't try to buy back the call if the option market's open, whatever the case is, that's kind of, I want to say, could be one of the downsides of somebody that wants to hold the stock. Now, what some traders will do is they'll just turn around and buy the 100 shares again if they have to give it up. The advantage here is that if the expectation is that it holds below, let's say, the 80 strike price at or below by expiration, you can capture some income over that time frame. Okay, if it breaks up above there, above your strike price, you still get to collect the premium plus what you're going to get on the stock price move from the 75 level up to 80. So there's like per 100 shares, you'd get like $100, obviously every point. It's $500 plus the short call income too. Okay, so let's look at that over here. Now, EW is one that does trade over 1 million shares a day, and the spreads are absolutely excellent on this as well. I'm not looking at the put side. That's my bad. I got to look over here at the call side. Still very good. I mean, 5-10 cents in a lot of cases over here, what you're saying. Okay, so let's do the same thing here. We can look at the same deltas, the 20 to 40. There's a 27. We've got an 80 right here. It does have 5,691 open or contracts on it right now. So there's a pretty good amount of liquidity. There's a 10 cent spread in there. All else equal, that does look interesting in terms of, you know, what we're seeing here to match the delta and some others. The theta right there is at 2. Let's go ahead and click on the 90 now. A quick note too for the covered call. We are only selling this because we own 100 shares of stock on EW right now. That's the only reason why we could do it. If we're not doing that, it's referred to as just an uncovered short call. It's referred to as a naked call. Let's see, there are a few other terms, but in other words, you're not covered on it. You don't have the stock. So what could happen there is if we were to break higher, what is the loss potential? Let's pull it up right now. If I were to click on this and just show it to you. There we go. We'll just do a single contract to match our 100 shares of stock that we own. There's the max loss. Theoretically, it is infinite. Now, it shows that, and that's why you got to make sure you look on the Thinkorswim platform and make sure you have the number of shares. You can't have 99 shares. I mean, you could, and you could still sell if you were authorized, right? Approved, I should say, for uncovered, call option writing. You could still do it, but there would still be a portion in there of shares. It might be one share that you'd have unlimited risk on if you had 99 shares and the stock just blew up to the upside and went substantially higher without the stock. That's where the covered call portion is so helpful. Okay, there's your max profit with this too. You've got a break-even price. Now, if this price of the stock just goes sideways and doesn't break out, hey, I mean, you get to capture $90 of it going sideways per contract, and that can help to offset maybe a small decline in the stock, the time that you're losing if it's going sideways. And in addition, when you do have a stock that does pay a dividend, I don't think EW does, but if they paid a dividend, they continue to pay that dividend. That's different than a short put that we talked about because, well, yeah, you own the stock. And so you have to own stock to get the dividend. That could be another source of income too. When you're selling calls, a covered call, but it's covered because you own the stock. So dividend and income. Just so you know, there's just a couple things, a couple forms of income that could occur. Let's go ahead and send this through so you can see it. And now we've just established a covered call. Ooh, we got a 97 cent. Oh, well, paper money is very generous. But there you go. So we've created a covered call. And again, folks, what's cool about this is sometimes you go through and you look at your portfolio, and you might not have known that you do have potential to sell calls to generate additional income. But you don't just want to do that because there's the potential to bring in income. You have that potential, but you've got to dissect it. You've got to look into it. And that's why I also wanted to look at, as I pointed out, MRO over here. You want to look at those areas where, shoot, we've been going sideways for a while, where maybe there's an expectation where, hey, you're getting maybe an engulfing pattern that's engulfing 5 days up here. Maybe you think it's going to pull back, but you don't want to give up on your stock. You want to still hold stock, but if it's going to go down and you think it might go to the lower range, well, you could sell a covered call. Maybe at a higher delta too. Maybe something just above the range too, to potentially generate additional income, right? If you thought it was going to do that. Okay. But yeah, it's a good reminder that we do have that potential. Of course, with options, you have to be approved to do that, to sell options. But yeah, it is another form of income. Of course, with covered calls, just always be mindful too. If it gets above the strike price by expiration, very, very likely, if it closes there about at expiration, very likely that you'll be called away. And you'll have to give up your stock. You'll still make the gain from where you own the stock to where you got called away if your strike price is higher, and you'll get to keep the premium. But yeah, you'll lose the underlying stock position, which, by the way, is a way for some traders and investors to sell their shares. I've done that before. I mean, just generally speaking, I've been doing this for over 20 years. So I've done a few of these things. I mean, you can sell your position. Who's to say you can't? If you had 500 shares of stock and it was trading up here, you could try to get a nice big premium for getting rid of your shares at the price you want. Or, maybe that big premium helps to offset the pullback if that was going to occur as well. All right. Oh, do they have an options chain? They don't have an options chain. Well, there answers that question. Thank you. I didn't look at this one. I just saw I was just using this as an example. So, but we did use the one that did have an options chain, the one that I looked at for the covered call, which is Edward Life Sciences. But good catch on that. But you get the general idea, I hope. It's a good catch. Thank you for bringing that up. I appreciate it. But stocks that are trading at resistance is just one of those ways where traders might say, yeah, I think it might do this again. It might come back. It's had a tendency to be in a sideways channel. Sometimes, too, they'll do it when, it's kind of flagging, potentially. All right. All right, folks. Well, Hopefully you found that useful and informative. We did do a few trades in there, a couple short puts. We did do a couple covered calls. Now, I will talk pretty frequently about these, and plus we do stocks as well as verticals in a class that I do teach, if you are interested in that. That's tomorrow. It is the, well, I'll just pull it up. Just to give you guys a little bit of insight on it. That is the swing trade class over here. So we do swing trading as well. We talk about a few of these different topics, flag patterns, different components. I'll go ahead and just post this into the chat if in fact you are interested. We do kind of widen it out a little bit. There's a lot of stock trading over a shorter term time frame, but that's what we do in that class. Folks, I hope you have a fantastic rest of the day. And like I said, a happy Monday to all of you. Thank you so much, Barb, for your help as always. Really appreciate it. There's that link right there. And there is a survey that was sent out in the chat as well. If you get a chance to fill that out, that would be fantastic. If there's anything you like, find it useful, whatever the case is, there's a comment section in there. I'd love to hear it. My manager does look at that as well. You actually have to click on it before our session ends. You can do it later today, but you got to click on it. Barb, you tell me if I'm wrong, but I think there's only 2 questions in there and then a comment section. But love to see any impact or any input you might have. Folks, have a great rest of the day. See you next time, all.